All right. Well, thanks guys for joining tonight, and we'll see if a couple of others trickle in. If you see anybody show up that's in the you see somebody in the waiting room, please let me know so that I don't miss anybody. But so I'm Ben, and I do the All in the Reflexes Substack. You can find me at Substack or at on X. And so tonight I want to go through the market timing signals, what we're seeing with the recovery scenario right now, and then um, we'll look at a couple of examples of past market recoveries and events, and where we've seen excuse me, and where we've seen things fail, or where we've seen shakeouts, so that we would know what to expect if that starts to happen. But this recovery looks very strong right now. It's been impressive, like one of the faster rebounds from a 20% drawdown in market history. So getting an alert of that something's too close to a screen I'm trying to share. There we go. So yeah, so it's been a fairly rapid bounce back, which has been good. So start off with a couple of quotes like I like to do. So this is Kim Ann Curtin. If you find her on X, she posts a lot of great comments and advice on trading psychology. She's an expert in that field, and I think this really speaks to how we were able to navigate this market downturn, and how we'll continue to navigate the recovery. But yeah, having the right tools in place and a plan in place ahead of time let us stay really calm throughout this drawdown, and it's helped me to navigate the bounce back really well. I've been pretty happy with how this has turned out. Another great one. So Brian Tracy's a motivational speaker. But so it's almost a contrast to the prior one, right? So the um, you know, ironically, like, my intention with the signals and the tools is to develop a risk management practice, and avoid risk, know when to take appropriately sized risk. But ironically, the more often, the harder that we look for security, the less of it that we'll have. So we know that we need to take on risk for opportunity, and so that's our balance. But I like this as a kind of a contrasting quote. A couple of things on our data points for this week. So we've got a model that we use with consumer sentiment, and we know that we've got the consumer sentiment surveys coming out tomorrow morning. What I hadn't realized is we know this data is on a lag, but the tariff announcements were April 2nd, and then the some of the deals started to come out, and the 90-day pause came out after the survey period ended for April. So we'll probably see a pretty poor survey result. So the interviewing period for the preliminary consumer sentiment survey should look pretty negative, since it precedes some of the pause and negotiation outcomes. And then the final may start to include an improvement in sentiment, and then the May report began April 22nd and concluded this week. So, or the preliminary of it concluded this week, and we'll see that next month. So, so the sentiment survey might be a little bit ugly this go around, and in this indicator where we've got the consumer sentiment in the middle, and we're using the break below the Bollinger Band as a risk indicator, and then rolling over on the PPO indicator as confirmation. We'll just be aware of that in case we see a false positive with some of the distortion in timing. We had this quote in from CyclesFan in the last session, and I like to revisit it this time, because he's calling out that when we see a spike in fear, and then a market drawdown, that the low of the move usually follows 5 to 8 weeks later. And so we're already 5 weeks past the max fear event, which we can measure with a spike in the VIX, is a method. So we've got that max fear event, and that coincides with the initial low. If we were to go out a full 8 weeks, then we're looking at the early June timeframe, which would coincide with like a timeframe number 5 on on the Fibonacci timeline, taking that timeline from the initial bounce back from the low to the first higher low is how I like to anchor those. So this could be an interesting time frame. We've got a couple of timelines in here that could serve as a pivot point for the market. And if we were to see another drawdown to a low, we would expect to see it in that time frame. Once we get outside of those 8 weeks, it could be a different story. But just wanted to bring that one back. And then looking at our weight of evidence approach, so we now have 5 of our indicators are in the green, 2 of them are yellow. 3 are still red, and this last one, this last one's incorrect. This should be a yellow right now. So the weekly is still in rough shape, but trending favorably. So it's still in the bear zone, but it's trending toward the bull zone. The daily's in the bull zone, and the monthly has never left the bullish formation. So we're really at 2 in the red, which are slower moving indicators, and then 3 in the yellow and 5 in the green. So that's decent shape. In really strong bull markets, maybe we get like 2 or 3 yellow signals, and most of this is green. So any red on the board is elevated level of risk for us to put a lot of size, or for me to anyways, to put size into the market. But this is trending much more favorably than it was even just a few days ago. So we'll go through a few of these things tonight, but let me just double check, make sure nobody needs to be admitted. So we'll go through these a couple of these tonight, but here are just some ideas for ways that we might be able to identify an invalidation or a failed recovery. So the number of companies that recover their 200-day moving average is going to be very important. We're not going to have a healthy bull market without a lot of participation across the market. We can use a channel or band system and breaks. There's a number of these that you can use, either regression channels, some of these that just focus on a center line. The Donchian channel is interesting because we've got the 20 and 40 day that we can look at. That kind of coincides with anchors back to that time frame for us to see a retest of the low or a lower low after max fear. And then classic Bollinger Bands, breaks above and breaks below. Bollinger Bands are a great way to know if you've got a trend aggressively moving in the other direction. An easy one that people could do is to take a look at the advanced decline line. There's a free one on TradingView, and then set a 32-week moving average of it, so about 160 days, and then it would be manual, but divide the two. I've got an indicator that I coded that does it, but this will be a great way for us to know if the number of companies advancing is continuing in a bullish path or reversing. We've got the capitulation oscillator that we use, the relationship of that to its Bollinger Band, and then using the momentum system is probably our best bet. I was scrolling back through, and there are very few times that it fails, and I think we can pinpoint use it in conjunction with on-balance volume is probably the easiest way to know if a recovery is a fake out or not. But so the RSI has now gone into bull market territory for our momentum system. If it were to fall back below 40, then that would tell us that we're reversing and going back into kind of a bearish zone. And then we've got the AVWAPs that we can anchor. We're going to expect the anchored VWAP from the high, from the all-time high, and from the low of this drawdown to hold the support. And if we see, a close below them and then resistance on an attempt to recover them, that'll be a failure scenario. So we've got a lot of options. We'll take a peek at the 2022 scenario where we had a failed recovery, and then a deeper drawdown. Unfortunately, there just aren't a lot of examples of them, but it'll show us what type of behavior to look for. And then, of course, I'm going to probably have this sentiment cycle chart on every one of our calls. But this is a great tool, and it shows us kind of where the market's thinking or what it's feeling at each of these stages. When we take a look at this drawdown, and it just looks really similar. It's like classic, right? You've got your panic, and then it comes back up and it fails, and you've got despair, and now we're going into our recovery. So we're probably, in here is probably where we're getting into like wall of worry and anxiety, where people are going to start to wonder if the recovery is real or not. We've got a couple of catalysts on the radar to look for, that'll probably create some of this type of noise that we see. And those shakeouts, why they're important is, the risk that I've put on, I'll probably take profits at a failure and keep the rest of it, the rest of it on the table. If we break back below even this low right here, because you'll get to a stage where the market is just doesn't it's just too uncomfortable with the volatility, and then you'll see a lot of denial before things start to really take off. And so that we don't want to be sidelined, or I don't want to be sidelined for longer than I need to. I still have some bias that seasonality will present weakness between August and October. I've got concerns that typical strength that we see in July could be at risk because of political catalysts and negotiations. But so far all of that stuff's going well, and the market thinks so anyways. And so we will just have to be kind of cautious with what we see in July. But then taking a look at so if we were to see an aversion into a denial stage, it might look something like this, which is very similar to the Elliott wave style that I drew in the last update. But that's our update on the scoring indicators or the timing indicators and those things. Do you guys have any questions before I jump into a couple of charts? Let's take a peek. I'll share the chart screen. So let's take a look at let's start with the 200-day moving average. So this indicator, the background is going to change to green as soon as we see, and you guys can see it, right?
We can see it.
Okay, excellent. Thanks, Mike. I just saw Mike's comment that his microphone's not working. So this indicator is looking for, on the top, is looking for 45% of the companies in the S&P to be above their 200-day moving average, and the S&P to be above its 200-day moving average. The one in the middle is looking for 55%. So it's going to be a bit more conservative, and the one on the top is a bit more aggressive. And you can see there's a couple of little fake outs in the one on the top, and that's why I think you can even get a little shakeout here with using 55%. But we still don't have. So you see some posts on social media where people are will poke fun that people didn't buy all the way down on this thing. This is truly a risk event. You've got. This is like now one of 36 times that this has happened in 50 years where you have a 5% drawdown within such a short period from your all-time high. That has preceded absolutely massive drawdowns in the past, and I'm just not going to play any games with it. So the right thing to do is to protect ourselves when that happened. And you can see even this indicator kind of shakes us out right here afterwards. This was that bounce that we talked about selling into when we first saw these signals back in early March. So we've been navigating this thing like champions, from the get-go, and so anybody that is poking fun that this shouldn't have been taken seriously, it just hasn't paid attention to history. But so this is not a full recovery yet. There's a lot of money to be made if you're nimble and good at playing bear market bounces. But when we look at past history, staying out of this territory and just waiting until we're in the clear, that's where like long sustainable runs in the market take place, and they last for a very long time. We don't have to really try to be heroes and grab ultimate lows within these red zones to do very well for ourselves. That's my approach, in my opinion, anyways. Even looking back here into Trump's first term, where we had the initial tariff shocks and things like that, you could try to get in too quickly, too aggressively, and get shaken out. We're better off just waiting for a great trend following path clearer. And there's great tradable names, if we're stock picking and picking names in between. I think there's a lot of opportunity. But this one is not in a full recovery yet until we have 55% of the companies participating. I'm really liking the way that this indicator came out, and one of the nice things about you don't want to see a lengthy drawdown, but when it's time to go risk off for a little while, one of the nice things is it gives you time to build and study and look at a few things. And I was able to clean up this volatility weighted put call ratio. And so this is combining the Williams VIX fix, the VIX of the VIX, the VIX itself, and ATR, and then comparing that to the put call ratio. So essentially when calls, the number of calls is when that ratio is so skewed into volatility, it's going to signal us in two ways. This one on the top is using an RSI, and it's an early indicator, and the one on the bottom is using just a stochastic, and that one gives a confirmation. And this is initially, when I set this up, it was just giving us the risk signal, but now with both of these methods together, it's giving us a recovery signal as well. And so as long as they're above their moving average and above zero, then we're in bullish territory, and that's the case right now. So this should be a really strong indicator. This is proprietary, and I'll probably start working on a paper for it once I can find a good source for a bit more historical data. But this one's been probably the strongest indicator for this drawdown, and we can see we've recovered this anchored VWAP from the all-time high. And this is the kind of behavior that we like to see. We failed into it, came back down, made our low. We gapped up over it, retested it with a bounce, and now we're headed higher, right? And now this might pull back and retest again, which we've seen in the past, but this is really, really strong behavior. And the risk appetite, as measured by the volatility and put call ratio together, is telling us that the market is very quickly recovered and leaned into a preference for risk. So I've liked this one. We can look at this with the follow line, which is a more aggressive center of a band system, and then my variation of Larry Williams' will trend is a bit slower. This almost has the kind of the effect of like an Ichimoku cloud, where you've got a leading and lagging kind of clouded area. But we're above. Both of these have gone into bullish territory and are moving above. If we were to see a failure or a shakeout, I would expect to see us break this line, break the AVWAP, and then if the will trend indicator, the slowest moving, or the one with the most distance, if that were to fail down here at like 5,400, that would tell us that this is a failed move and we're headed lower. The Fabian market timing model. This one's the very slow moving one. The one that's been the Dow is still kind of a holdout here. It's very, very close to crossing that 34, and then this one flips from yellow to green. But this has been this is a strong indicator with great historical performance, but it's very slow. Um, there's a million different ways to look at breadth, but this one's very strong where it's got the cumulative breadth score or the cumulative net new high and net new low. And that's very close to recovering its 50-day moving average. And once we get back above that, then this one will be green. The 10 period rolling one is has been bullish, and it held after its bullish crossover from the 17th. And then we've got the when we look at the times that this failed, right? Because there are shakeouts on the recovery of the new high, new low, and we've got this whipsaw in the past. We can look at the relationship to the to the major moving averages. I think here we're showing 4 and 6 are. So we've got a 325-day moving average and then a 174. So these are decent cycle lengths. Those were negatively sloped when we had this fake out back in 2022, and that's not the case now. We had a slight negative slope to the 174 that we can detect if we zoom in enough, but the 325 has stayed upward sloping. We've recovered both, right? And you can almost make an argument for like a weak argument for a inverted head and shoulders in here, but the way that it's recovered each of these looks, you've got a much more bullish looking behavior and recovery of these trend lines than we saw back here in this failure. This is very clear resistance into trend lines that are rolling over, and these are still trending upwards and in a recovery pattern. The extreme vulnerability. So this thing started giving a negative signal at the end of 2024, and then we didn't see this, didn't have this problem in the market until 3 months later. So breadth is just one of those awesome things. It's a condition, it's not a signal. So and conditions, like we've said in the past, conditions don't tell you when they'll matter, just that they will at some point. And so this one, after having its second longest duration in risk territory, has now reset twice. And we talked about how this one can reset, and then you can see this second low like we did in 2022. And that's why we've got some help with this one. So we've got the selling climax where we're concerned if we see net new lows in a day, daily net new lows go above 4%. And you can see that we're not seeing that now. In past with these failures, we started seeing that occur after the indicator reset. Here we've had the indicator reset twice, and new lows for the day are well below the 4% threshold, and that's good. And then we've got this advanced decline line divided by its 32-week moving average inside of a Bollinger Band. And when we've got a lot of risk, we're banging against the bottom of the Bollinger Band and breaking below it. In this case, we've continued to ride that Bollinger Band higher after the indicator reset. So this is giving us some really strong confirmation. That's what we see in the bounce back in 2022. We were immediately not putting in new, extreme new lows for the day. The Bollinger Band, or the advanced decline line, is riding its upper Bollinger Band to new highs. And again, we saw that in 2019. And so these were the scenarios that did not have a lower low or retested the lows after the reset. In this case, we came back to some more of that 4% volatility, and we were kind of range bound in the advanced decline line divided by its moving average. So these are things that'll help us to understand what type of behavior we're seeing and should expect to continue seeing from the market. Then this one's kind of interesting. We've got the extreme absolute new highs. And so this is an absolute number. So it's looking at whether the number of new highs is like it's giving us an extreme value of positives or negatives for new highs for the day. That's starting to expand, and we want to see that, show us some of these real colorful lines. Like when we see those in clusters, to go back to like a more expansive bull market, you start to see those kind of like in the midpoint of a bull market. You see a lot of extremes in the measurements of new highs. But then when it gets to an extreme, sorry to scroll so much, but when it gets to like this extreme low, now we've got a tradable opportunity where it's an oversold indicator, and the signal here is, we buy when we see it and we sell within 5 days, because these tend to just be exhaustive bounce backs. And now once we've seen those tell us that we're kind of getting past a downturn. Once you've got a couple of these on the board, this tells us the market's kind of gotten through its turmoil, and it's looking to looking forward and looking to move in a continuation pattern. One of the things that when I see a challenging market, I start to go back to the tools that I'm most comfortable with, and those tend to be the things that I learned earliest on. And so this is Brian Swan, Fiboswani on X. You can find him as Fiboswani on TradingView as well. He's an excellent analyst, and I still subscribe to his group. I haven't participated in it in a long time, but his method is
Great job. Have a good day.
His method has done really well for me for a long time. And in this one, we're looking for that bullish crossover in the RSI, and for the strength of the trend with the ADX that recovered on May 9th, and that puts the S&P back into a bull zone. And then on the weekly, this is where it's I needed to change that signal from red to yellow. We're still technically in a bear zone on the weekly. We'll probably, unless we have a rough market tomorrow, we'll probably get pretty close with the close tomorrow to recover in the bull zone on the weekly. But we can see our major moving averages are all positively sloped on the weekly. The fastest one has shifted from red to green, and the ADX is rolling over, which suggests that the strength of the downtrend is weakening, and you've got the positive directional index curling upwards, and that's going to change from blue to green once it gets above 25. So this is very, very constructive. And then on the monthly, this just came down and almost tested its highest moving average as support. So this is a really constructive look, and we don't see it. Once we get this weekly into the bull zone, that's really, really healthy. Those tend to be sustained movements. We scroll through, we'll get into a bull zone and we'll be there for months. You don't tend to see a lot of shakeouts. This is the capitulation indicator, and this is the one that I've shifted to the more binary view. But when we look at it here, we had this extreme high in the short-term capitulation oscillator. These aren't really intended to be used for timing tops. These tell us when an event is over. And so swinging from that to that extreme level, instead of presenting a higher low, is another pattern to look for in this. And then the slower moving long-term capitulation oscillator, similar to that advanced decline line with its Bollinger Band, has continued to ride the upper Bollinger Band higher. And a lot of times this indicator will give you more than one low, but when they're trending higher against their upper Bollinger Band like this and showing you an extreme, like we did in October 2023, that's a sign that the market's looking to recover its bullish um, continuation, right? It's less likely to be a revisit of the lows once we're seeing that type of behavior. To make it easier for us to use, I took those two oscillators and then another breadth measure, and I moved them into this binary view and filter out the low readings. And so this will only show us when we've got an extreme. It's a green indicator, but it's actually bad, right? And so this is telling us when we've got more extreme breadth measures, and the exhausted ones come up above this yellow line. When we get really adverse measures in trend following systems, there's three different ones that give us this combined binary score, and that'll get up above the level 13, 14, and that tells us that we're in a really strong downtrend. The uptrend is deteriorated quickly and firmly, and then similarly we've got the scoring for that volume weighted or the volatility weighted put call ratio. And so you start to see these things elevate. And this is an early indication that we're running into trouble in the market. These three indicators should be at zero, or if we're seeing all three of them present us with elevated figures, then we're in for a rough volatile ride in the market. And then at the very top, this is an aggregate of all of them. And so we can really just focus on that one. And what it'll do is, as soon as we get into this red territory, we're now in a strong downtrend that we want to avoid. And once we have a fast enough recovery from it, we get a buy signal. You can still get shaken out with this, but it tells us, once you see these brighter colors and these lower readings, that that we're moving into more sustained upward direction, and that's where we're headed right now. More traditional, right? Like we'll take a look at the VIX here. We had our spike high on the 8th, and then our upper band on the Keltner channel rolled over on the 11th, and that confirmed the low that we saw on the 8th. So we would need to see another like spike high in volatility before we were concerned that that we were in for a lengthier drawdown. I don't know why this regression channel is not drawing, but let's try and reset it. There we go. So when we had our volatility spike in 2022, we made an all-time high, or we made the local high, multi-year high in volatility in March 2022. We started our regression channel, and then we use this method from that point forward and just keep expanding the regression channel. And then anytime our Keltner band is above it and then rolls over, that confirms that we've seen the low in the market. And so we'll be able to use that approach once we get a little more history. But at this point, we've had some very low readings in the VIX before we had that volatility spike, and so we don't want to work from the prior regression channel. We're gonna use this new one going forward. But this environment that we're in right now, where we've got we're below 20 in the VIX, this is still a bit more elevated than it was. I mean, we were at some pretty extreme lows between like 11 and 13 the last couple of years. It's a pretty extreme low. Below 20 is this is an ideal volatility environment for swing trading, for position trading, for trend following. These are the types of environments that I tend to do better in than extreme volatility that works well for like hedge funds and day traders and stuff. Then I think that really quick look at Bitcoin. Um, so a couple things I wanted to take a look at as well. Um, we've got some things that are doing really well. I've shared this in a couple of groups. This is work that I've updated from, or that I keep referencing back to, and I update this chart. But I got this cycle from Rickus, who I follow on X, and he's very good with these types of cycles. He's got a great eye for them, and unique time frames. So not a lot of people use the 3 week time frame. Connie Brown does for the particularly for the Dow, but using this 3 week time frame and a static cycle that begins in 2011. We've got this pattern where you've got a lengthy expansion in semis and the S&P, with semis outperforming, and then you get to an 18-month or so period where the broader market starts to outperform and the performance of the semis starts to flatten, and then they both roll over together, and the bottom of that is typically like an ideal buying point. And the earliest that we would see something like that, if this cycle is to continue, we would start to see the semis run into a lot of trouble. So this kind of contradicts the technical, things that we're seeing in the previous charts. The cycle is telling us that in the past at this time frame we would expect to see a lot more, much stronger drawdown. So it's possible that this pulled forward early, and that the RSI isn't going to go lower and touch this lower trend line. But the cycle tells us to expect to see that happen. So in particular, I'm more bearish on semis. I'm not looking to play like a broad array of semiconductor stocks. I would stick to, this is just me personally. I'm going to stick to my favorites and probably lean towards companies outside of that sector, unless I see just very, very compelling individual charts that I want to follow. But if this cycle repeats, the soonest that it would end would be, or that we would see this low, just based on what we've seen in the past. The most quickly that we reached that low in the past was in 2018, and that was within four sessions, which would be 12 weeks. And the longest was 13 sessions, which would be almost 40 months. So the longest time frame for this to play out, based on past history, would put us around January, and the shortest would be August. So we could see very strong setups for semis, and could see some turmoil come out of trade negotiations that causes like a spike low or something in the SMH. But I just I'm going to keep coming back to this cycle until we have enough evidence that it's not valid. And then taking a look at, I'm not in applied materials, but this is a semi that reported tonight, and it looks like they got up. So this has been in a downtrend. They're not a top performer in the semiconductor sector. They're not like Nvidia or anything, but this is a company that supplies materials to semiconductor companies, and so this one has failed into its moving averages, and then with its evening earnings report, plummeted quite a bit tonight. So it's down about $10 a share. A quick look at Bitcoin. So Bitcoin is doing well right now. And it's retested the prior high, but it has not gotten below this purple AVWAP. And this AVWAP, when we see, I'm sorry, USDT dominance. So when the stablecoin dominance gets below this AVWAP, that's when Bitcoin goes on to make a new high. So a lot of altcoins have done well, and people are pointing to Bitcoin dominance eroding a bit, or rolling over a bit, as likelihood that we'll see an altcoin season. I'm still looking for this to break back below the AVWAP, for Bitcoin to surge higher, and then probably see a final move for altcoins for the season. And I'm not entirely sure that we see that in this time frame. We've got a couple of news events with Coinbase going into the S&P. We've got the goofy Bitcoin Pizza Day stuff coming up. There's a few things that'll bring some attention to crypto, but I'd like to really just stick to this type of measure. And if we see this USDT dominance fall below the AVWAP, that's going to be a signal that that Bitcoin's headed for a new all-time high. Now, when we take a look at if we take a look at the S&P and we look at a couple of recovery scenarios, so let's take a look at what Cycles Fan said with the 5 to 8 week. So here we've got 8 weeks measured in calendar days. That takes us out to June 2nd from the where the VIX spiked, and we've got our 5% drawdown signal, and so we're getting pretty close to that. But now, if we come back and look at past volatility spikes, we probably move this one back to where it initially spiked. We're in this case, we've got the canary alert, 5% drawdown alert triggers, and then we come in and we make these lower lows in 2022 on lower volatility, and so we've seen some other things that suggest that we're probably not headed in that path. And if we look at the initial spike in volatility, the low is coming with greater volatility. It comes within about like 5 weeks, and that's in the 2020 drawdown. We've got multiple volatility spikes in 2018 when we come back to the lows. So this time frame does appear to be important, and I think we need to keep this on our radar, that if we're going to see a retest of a key level, it's probably going to happen between now and the early part of June. And I just went back to I think this might be the last one that I went to take a look at, was 2015. So you got the volatility spike, it revisits the low on a lower volatility reading, and then you've got a recovery, it comes back and retests again. So these are scenarios that we might see. We just have to be open-minded to it. If we look at a few different ways to be on the lookout for a failed attempt, right? You can take this is a Donchian channel. This one's set to 40 weeks. You could do one on 20, and this is going to keep updating to the lowest low within the last 20 days. And once that's violated, you're now taking out your most recent low, and you're probably headed lower. That's one method. Bollinger Bands are excellent. Like this one's got a breakout signal. It's closing price, and closing price is a little bit noisy. So we do like entire candle or just the body, ignoring the wick. And so here, you can see when we've got breaks above this 20-period Bollinger Band with the full candle body above, that's a sign for continuation. Breaks below, or a sign that we might be headed lower. So we're using a channel system like this can help us to anticipate issues with the recovery. You can use Keltner channels. This is just one that's applying 3 of them at the same time and using multipliers of 3, 2, and 1 for a 21 period Keltner channel. And we can see that, let's take a look at the 2022 drawdown and recovery. So we didn't make it past the first level of the Keltner channel in 2022, and then immediately came back down and started retesting the other ones. And that told us that there was a bias lower. And then we had this failed attempt at a recovery up here. So if we take a closer look at that one with some of the drawing tools, maybe our moving average. So in these 2022 failed recoveries, this is like a perfect, almost like textbook failure. You're coming down into your lower low. We recover our price recovers above the major moving averages, does it with a retest, and then when it fails, it immediately is finding resistance. Comes down and finds support at the faster moving, comes up to resistance at the lower, and then starts to fails this lower AV gap from a prior low. So this is like this is what bad news is going to look like. A stronger like recovery scenario, like here we are in the 2020 drawdowns, kind of unique, but we're getting above those major moving averages. We're not seeing, you're breaking through it and immediately finding support on retests. That's what good news looks like. Again, down here, you've got in 2018, we had this failure into the faster moving. The key here is like the slope of these moving averages descending like this, and failures into descending moving averages are what bad news is going to look like. And then as they curl upward, and you're seeing retests and support like that, that's beneficial for trend following. With the RSI, in these failures, what's interesting is, well, what we would expect, right, is RSI did not move into the bull zone in these failed attempts in 2018. It moves in at the beginning of 2019. And we've got confirmation with on balance volume. And so you'll notice that, we can get shaken out on this RSI crossover, but not often, it's not often that we get shaken out on the RSI when you've got confirmation with on balance volume. On balance volume, there's three different ways to use volume, or three common ways to use volume in a momentum indicator. There's the money flow index is really helpful in range bound markets. The on balance volume is helpful in trending markets because it confirms the direction of the trend that you see, and tells you that you've identified a trend path, and volume is accompanying that. The Chaikin oscillator uses volume, and that one's a little bit noisier, but it's more helpful for identifying a reversal. So if you were to use like two of them, probably like the Chaikin and the on balance volume would be a little bit overkill, but the two of them together would show you a reversal and confirmation. I prefer to only use one of those volume indicators at a time, or volume-based indicators at a time, and so the on balance volume with RSI seems to be really strong. And so again, you've got 2020, you've got on balance volume recovering in April of 2020 and finding support on its trend line. You get the RSI crossover, and we're off to the races. Then you get into 2022. We've got a spike low in the RSI. Some people will buy this, but it's if you're going into a bear market, you're going to see repeated oversold conditions in bear markets, and so buying the first one of these is usually dangerous. And so you get into March, and we have this bullish crossover in the RSI, and you can see it's immediately left translated if we're looking at it as a cycle, right? It makes its high on the crossover, loses its moving averages, and just continues lower. And on balance volume came up, but then on balance volume fails And so if we were to enter this as a trade, this would have been a loss. But you would exit, right here when it crosses below about 40, and then you just stay out of it until you get a crossover. And again, you have another one that failing into overhead moving averages, and then lack of confirmation from on balance volume. Contrast that with the recovery that we saw in 2023. Here we are in April of 2023. We've got a bullish crossover. We've got stronger confirmation with on balance volume. You're still getting a little bit of washout, but your moving average is curling upward for the first time, right? And so that's what this bull market recovery starts to take the form of. And you get the shakeouts, and these two indicators together help you to navigate that. But compare that to what we see right now. Clean up some of the drawings real quick. We've had failure into the moving averages. Now we've recovered it with some authority. We've got upward sloping moving averages. We've got the bullish crossover and really, really strong on balance move and on balance volume with an upward sloping moving average that it's above. So this is a very different look than the failures that we saw in 2022 and that one in 2018. This is a much better look, and we've got some good distance. We've got an upward sloping RSI. It's not peaking immediately on the left side of it so far, but we'll keep an eye on it. But this is a much stronger look than we saw in prior recoveries. Now we know that tomorrow is a large options expiration, and some of this is probably related to extended short positioning. The market tends to go really short on equities into bear markets, leaning into it more heavily. So there might be some buying to cover that's helping us. And then we get past options tomorrow. I think looking at the Stock Trader Almanac material, I believe that 2/3 of the time we see the market end higher in the May triple witching expiry, and then the next 2 days are predominantly bearish after the middle of May. So we'll see how that plays out. That's for all years on average, and not ones that are sitting right on top of an event like this. So we'll have to see how it plays out. And then I'll turn the moving averages off real quick, and then let's take a look at with the drawing tools. So this is busy with timelines, but if we were to look at a seasonality flow, when we look for, there's a lot of ways to forecast with Elliott Wave. One way is to, and I'm sure there's some ways are more correct than others. One way is to take a look at the distance from the length of wave one, or we can take the distance of wave one into wave two, and then we're going to expect the market to be between your wave three up is probably going to be between 168 and 2. So this is around where we might see a reversal. I've done it in the past, taking the length of the first wave and then using a distance of 1.68 from the bottom of wave two. That would put us around, around 6150, a retest of the prior high for a top of wave three. And that would be a triple top. And so we might get a pullback from a triple top. That would also line up around the late May, in between maybe these two time frames. And then if we were to see a wave four down, the most constructive look for a wave four down would be probably a retest near the March 25th level. If we find support there in the top to the middle of this gap, that would be a really constructive place to come back and find support. And then that would be give us a lot of confidence that we're going to see a wave five up. And a wave five up would probably, take us into one of these July timeframes as we get closer to some of those other news catalysts. But stay open minded to this, potentially being a much stronger move. But if this were to be like a classic five wave up, I think this is a strong potential scenario. And then a corrective move afterwards would take us into the um, August and September seasonality almost perfectly, and then set us up for our movements into the fall, where we'll get where I personally get a little bit more aggressive. So that's where I see the state of things right now. I'm really pleased with the bounce back, and we'll see what the volatility looks like over the next couple of days. But I think we're um, yeah, I like the way that price action has responded into this recovery. Um, let's uh let's open it up. Like, do you guys have chart requests or things that you would like to take a look at? Or do you guys happen to see do you have a different read on things that I than what I've seen?
Oh, everybody's so shy. Hey, Ben, this is fantastic. I really appreciate you doing this. I really don't have any questions yet. Still trying to learn this, but this is super helpful. Thank you.
Oh, no problem. Yeah, I figured I'd give it a little awkward silence to see if somebody jumps in.
I'm
Um,
filling it in for them.
nice. Well, let's take a I'll take a look at a couple of things that I had in the last newsletter, and a couple of things that I see this week. So in the last letter, I took a look at it's a bit small, but we had KINS, so Kingstone Companies. This is a pretty strong company in the insurance space. I don't like the way that this week has panned out for these guys. So we had an event this week. Yeah, they had their earnings this week, and we've had this strong reversal candle. So this is an engulfing reversing candle, almost like a tweezer top, but it's bearish engulfing, and this tells us we may have, this may have actually been an ABC up, or yeah, I'd have to redraw these waves. So we might be headed lower with this one, and I'm going to move the AVWAP over to its new high. But yeah, so this one is off the board for me, even though it's still technically in bullish territory. I'm just not comfortable with the way that it's played out. And then QFIN is another one. Um, you know, calm down some of the drawing on this one. And this one I'm not as comfortable with the way that it's 34-day EMA band has rolled over, and maybe if it comes down and bounces off of it as support, I'll feel a little bit more comfortable. But this one's losing its uh its on balance volume is flattened out, and it's starting to take a look of hanging out below it. So this one might be overextended in reversing. Um, Mike wants to see CRWV. Let's take a look at that one. I don't know if I've oh, CoreWeave, yeah, this one's been on fire this week, right? Um, Now these guys just IPO'd. So these can be a bit tricky. Do we know, Mike? Do you know if they have a lockup on stock for insiders? Find that real quick. We're gonna have to take a look to see this because this happened with like ARM and a couple of other names. I know Webull just came out and they had um their IPO and you see a big run up and then a drawdown. So this one, let's look at a lower time frame. We'll do like maybe a offset time frame. So, so you've got a round. This is tough because it's there's not a lot of history here, but when you've got these rounded bases like this, let's see what the volume looks like. So I would say if we were to forecast it on like a basing pattern, maybe something like, you know, up to about like this level, and then there. So this is probably pretty close to its measured range from a base and breakout. So we'll have to see what this does. Like if we also look at the time frame. So you've got the formation of this base was 224 bars. So we were to take a fractal of that, that would be like 56. Oh. So if we were to take like um if we were to consider this to be like a fractal of the basing pattern, you might see you might see it like you know come up and then come back to the base um by the end of this. But how it behaves by like the end of this month, like if you get a break below this base, then you're probably putting in like a handle over the summer period. But if it bounces off of this, then we're probably in some pretty constructive territory. I don't know anything about this business other than that they had the very recent IPO. But I would take a look at what their lockup period is for shares for insiders, because you probably see like some selling and shorting around that time period. And then usually once you get past that, if it's a really strong name, it's going to continue. But I like this pattern's real clean, so I'd say you probably get up around like 76, then a retest of this base. If it's supported there, that would probably be a really nice entry point. And then let's take a look. Yeah, so I think you're right. If 46, oh, you're in around 46. Okay. That's a good level. I'd say as long as it stays above 56, it's a keeper. It would be for me anyways. And let's take a look at docs. Oof. This one got crushed after hours. The report today. Yeah, so they had a miss in lowered guidance. That's a double whammy. And so this is going to be a failure on and this will cause this one to fail to recover its RSI, and its unbalanced volume is gonna plummet. So this will probably, you'll probably see the ADX come up and strong negative volume if the market's really unhappy with their after hours earnings report. Let's take a look at INDA. I, you know, this of the international indexes, I'm a little hesitant on international indexes right now because they ran so hard during the US drawdown. So and so if we have a strong US recovery, strong recovery in the US index, then um probably start to see some funds flow out of the internationals, but this is a good looking pattern. And again, like you have a fractal here that looks pretty consistent. You've got um I love some of these indexes like where you can have like this is a 3-year basing pattern, right? And then and now you've got like essentially like a 1-year breakout and then a retest. So um this looks like it's following a bit of a cycle. Like we could make an argument with a sine wave of it, you know, being a bit more like this. So it's fairly consistent. I'd say I'd like to wait and see what US markets do before getting too aggressive with some of the internationals, but that's my taste for it. But I also really like right now for international, I really like um both Spain. Yeah, this looks so contrast this with INDA. So INDA, you've got downward sloping and the on balance volume, but it's this looks actually looks pretty good. Compare that to Spain, it's been in a bit stronger of an uptrend. You can make a case for this being extended, but this is actually probably the middle of a wave three. And and then Singapore, we had this really big drawdown, um, similar to the US, and now a really massive recovery. So this one looks like it's just breaking out of a base. And so these ones might be a bit, you look at this huge basing pattern in on balance volume that's upward turning. Like this one, I think if you're going to speculate on an international index, I like these ones a lot. And a big name in the Singapore space is going to be SE. And apologize for how messy this is. Let's see if we can hide a few of these things. Um, but yeah, the SE I think is probably I've been in and out of this one quite a bit. We're probably due for a wave four down, and then a move up into the 170s potentially if this is a 5 wave up. But yeah, those are two international indexes that I've liked quite a bit. And this this one, Futu Holdings. Oh yeah, I did this one a while ago. So this one I would have done after one of my classes with Connie Brown, where we did the where we drew the confluence zones, and if we hide the volume indicator with the point of control. Um, yeah, so this one's built up like a lengthy base. You get your volatility weighted MACD is breaking bullish. You've got kind of a consolidating base in on balance volume. I'd like to see that ADX get up above 25. But these were some areas of interest that had confluence with multiple uh, ways to anchor Fibonacci um, retracements, and the high of it is 151. So I don't know enough about the company to say whether we would expect to see that, but this 105 has been a strong area of interest. So let's take it from like the low to that 105. Make it like a little less goofy wide. That's that, that gives us a like a measured range, probably as a re-challenge of like the prior high. I'm going to add this one to the list too. Interesting. Oh, the brokers tend to do pretty well this year too, or this time of year, seasonally. Some of the Take a look at some of the names that I had in the last write-up that have gone pretty well. We've got you know, Robinhood, I'm probably gonna continue to build up a long-term position in. I think this is gonna turn out to be a very sticky service over time, and their user base should be entering like some prime user or prime earnings years. So um, a local high might look like around 168, and then we'll want to see at about, I'm sorry, 68. So once we get to like about 68, it should either make a move higher that plays out for about 25% of the length of time that it took to form this basing pattern. And so we would look for like a break to a new high and a retest of this base, or this level will fail and it'll give us a cup pattern that should fall no lower than about like 50. So I think this is a really nice one to keep an eye on. It should offer us multiple opportunities for accumulation and profit. So I think this is one that I personally like it for trading and um, for a long term. Uh, Abbott Labs has had a couple of interesting news catalysts come out after taking a look at it. It's got the strong seasonality this time of year. Um, I think that Nutrien is one that I looked at and I feel really strongly about. This is one that Tom McClellan called out. We should wait for a move in grains before getting too excited about it. But I do think this is a good long-term play. I've got I started to add a position if we do see a wave two pullback to the green AVWAP. I'll probably triple the size of the position and then hang on to it until the middle of 2026. Their financials don't look great to me, so this is really just an asset rotation play for me. Um, in case anybody wants to get into GAN boxes with me, so I have not reduced my Eli Lilly position. I like that it is hanging on to the ascending angle in this GAN box, and it's at an inflection point. So as long as it's above, 720, by like once we get through the options expiration, and it doesn't, slip into this lower level, I'm this is a long-term hold for me. So I'm not making trading decisions with this one. I'm making position management decisions, but I'm in favor of like the way that it's put in a higher low instead of a lower low. If we see a lower low, then I'm definitely out of this thing. But we take a look at the um, if we take a look at the planetary tools with it with the time trades system. Another thing that I'm interested in is it has followed the planetary square of nine, and the planetary Ganfan pretty consistently. So, we could see it come down to this inflection point by mid-May in like the 690 area. And then I would be looking for it to take a bounce. And if it doesn't clear, if on a bounce it doesn't clear 800, that's also going to be a bearish sign for us. It's going to tell us that it's navigating this descending, channel and not recovering to an ascending channel. And it's in a squeeze between the two of them. Why these things work, I'll never fully know, but they're more consistent than traditional tools when you find the right anchor points. Now we'll take a let's take a look at Eric. It's Erickson. Oh yeah, there's got to be somebody who's just been holding this since 2000. Jeez, that's crazy. So it's always wild to see these things come back and the AVWAP from IPO continue to be relevant. Like this is why I like to anchor one AVWAP to IPO and just leave it there. So since 2003, that's a good level. Yeah. So yeah, you see it come down and it really separates from its AVWAP like back here in 88 and then makes this massive climb and this huge extension. And then when it breaks, like it comes all the way down and bounces off of it. These stay important levels. And then once it fails, you get a lengthy bear run from it. And we see this with like biotechs all the time. And so it's still, kind of finding an area of interest from that AVWAP. Uh, we'll anchor one at that high, red. So it's just fallen into like a bearish territory. And your your bullish trend, the strength of trend has rolled over and the positive directional index is below the ADX. So this is bearish for right now. I would if this was a position of mine, I would probably be taking profit and waiting to see what it does because they could roll back lower. And I do like that it found support at this AVWAP from the 2021 high. That's always constructive when they get the support at that level. And I'm still on the weekly, so um, that RSI is not optimized for weekly. But yeah, this could be, consolidation area. I'd look for it to break above this formation and maybe do like a break above and retest. This looks like an island top almost. But the volume also looks like kind of low on this, which might be a low liquidity issue. We had I don't know if any of you guys are working on SoundHound at all, but this is a name that just continues. It's a lower dollar stock, continues to do pretty well. We can make a good case for an inverted head and shoulders here. It's failing into the AVWAP from the all-time high, which we expect. If it finds support at this $11 area, then I would look for it to probably go between like I'm expecting like 13 and 15 by like early. I'm planning for like some options plays in the July timeframe. But I've been doing this one with covered calls and covered puts, and then just a couple of straight up trades. But this one's been really easy to follow, and sometimes you just spend more time with one, and you get to know it. I had a request from somebody out that I don't know if they're on the call tonight, but they wanted to take a look at IREN, Bitcoin mining company. So this has kind of reversed almost at the 618, and it has not made it back up to the AVWAP from the 2024 high. Is that the all-time high? So you had like a double top in 24, and then it's broken below the base of that, which is not good. But yeah, so you're probably like midway through a basing pattern on IREN. Um, this is, this is kind of to be expected after the a halving event. The mining costs get really high, and miners are they run pretty lean. So it's had a bullish crossover, and three settles like above this 382. Um, so retest here is it's not awful. I think for IREN, maybe we're looking at like a scenario, 5 wave scenario where it's going to do this. Um, yeah, probably like a lot of things like lining up to the July timeframe. Um, so this one looks okay, but a break above the 786, and then maybe we see, and maybe we actually see something like more like this as a potential scenario. If but this means this is probably for any of like the mining companies, I would just keep an eye on what Bitcoin is doing. Whether funds are flowing into stable coins or whether they're going into Bitcoin and altcoins. And you'll probably have a number of these names move together. I know Aaron wanted to take a look at um, TLT, and so when I look at like the 10-year, looks like we've seen this ABC play out, and we might start to see, rates are way up, right, or they're up right now. Um, we'll need to see rates calm down if we're going to see treasuries expand, and we probably need some more of that cluster of treasury maturities to cycle through, which should be about I think we get through like the majority of it by September. But this is still kind of a rough time to be playing treasuries. If doing treasuries, my preference is to do them the um, with the treasury market itself and not with the ETFs. I think that might have been. Oh, so a real boring name is one that I never get a lot of feedback when I post about Procter Gamble, but this is probably going to wind up being one of my biggest positions for the next couple months, because I normally have a large position in it, but we've got the seasonality for Procter Gamble. They tend to do well in July, but their strongest months come into like September, October, and then you get good relative strength with Procter Gamble in at times when the S&P's tends to be weakest. So if we highlight, um, so if we look at Procter Gamble divided by the S&P, you've got a lot of months where a lot of times where you trend higher, particularly into like September, where you've got relative outperformance. But then the rest of the time, it's just a stalwart and a dividend income play and a safety play. So it's part of like my Max Sharp performance on my portfolio. It's kind of rare, like in 2013, where um, it's being outperformed by the S&P during those weaker months. So this is a time of year where I like to add it, and I think it's particularly in an area of value for me. Looks awesome. So you've got this AVWAP anchored to the 2022 low, and it's come back down with three tests of it at the 1.618 of a drawdown from its last momentum crossover. And so I'm looking for it now to take a bounce up into the 786 at 163. And then once we get past that, we're probably looking at like 167 is where I'll start to take profit on it, and then maybe retool it again for August timeframe for that September October play. But this is one that because it's a big long-term position for us. And it doesn't. You're not going to get massive moves out of this thing. Even a good trading opportunity, like let's say we're buying it now and we expect to take profit up here, that's like a 3.5% return. So I end up attacking it with a bit more size. But that it looks like if you were looking for one to counterbalance like tech and biotech and stuff like that, a name like this that's likely to move right now is probably okay to go with. And they tend to navigate the FX issues and global supply chain issues pretty well too. I think that's all the stuff that I had on my short list to go over. Do you guys have any others that you'd like to take a look at? The um the aerospace names are likely to do pretty well. So this OSIS, OSI systems, this is one I'll probably, look to hold a bit longer term. Um, if this is a wave one, then a wave four might come. Let's see, we're a bit higher. So wave four might come down to maybe the bottom of this candle and the top of this basing pattern before we see a wave five continuation. But this has been a real strong name. And then we've got um, Archer Aviation has done really well. Let's see. Oh wait, no, that's not. So we probably got like some options activity going on in here, but this one will probably see a lot of volatility these next couple of days because of the options activity. And let me see what's going on here. So um, these GAN tools are really particular um, to the ratio, but so if you're doing anything with Archer, I would say this scenario is running a bit hotter, but it looks like we may even be getting up into this next arc, right? So what we've seen in these GAN boxes is you leave one of these arcs, and then you can run like into another one. It becomes like an area of support and resistance. It stays trapped in there when it goes through its ABC correction. So if it's moving into this upper territory, the ABC correction that follows this last move up, it's probably going to come down into that arcway. So that should be a pretty interesting one to keep an eye on. Another perspective of this is um, Ethereum's also um, Ethereum's also showing some similar behavior, and it's navigated the descending channel and the descending angle in the GAN box pretty tightly, and then has gotten right up into this arcway. It's probably going to correct in like a flag motion down for a little bit, and then up into like mid-June probably up into this arc in the 0.618 would be a target that we might see. So it could be an interesting one to keep an eye on. I know it's a really hated name because of how much it's underperformed in this cycle. But yeah, Mike, let's take a look at TAN. This is the solar names. Yeah, the solar names are really going nuts. I had a good trade on First Solar. See, some of these are doing really well. So I don't know if this as a sector is gonna, continue to take off. But these are doing really well right now. You're getting into a resistance area around like 37 is the next like overhead a VWAP. And if we run into resistance there, maybe it comes back down to like 33 and then gets up to this one of like the 42 level. And we could try see if it's made any meaningful moves against the 50. So it's like running into a little indecision at the 0.5, which is normal. It should push up to, and it's always awesome when these AV webs start to line up with a fib level. So you probably see it get up to like 36, 37, resistance at the 618, maybe come back down to 32, and then a move to at that time you're going to have this higher one probably trending towards the 786. Um, yeah, this is a good pop in the on balance volume with it too. And then run, I took profits in run because I played this one with some covered puts that sold in profit, but this looks like it's really taking off on us. So it's getting up to the close to the 618. Maybe this retest at the 382, and then potentially even a test of the 16 area. But this is an older name that I realize is their semiconductor. So they've had some interesting seasonality. They're a 10-year-old company. Their strongest months are through July, and they've had like some really big months in July. So I would not, given that it's been so consistent in what we know about the semiconductor cycle, I'm not planning to be in that name past July. I'm expecting that, um, if we see the conductor cycle roll over and in this strong downward seasonality, it's probably going to move with it. It probably would draw down into August, September, October, even if the semiconductor cycle behaved differently this round. And then another semiconductor name. Um, yeah, this one. Yeah, so this is interesting. So you've gotten into the bull zone, but it's going to be likely. Yeah, we'd like to see it like get back up over 11, probably to feel like the basing pattern is resolved. And let's see what it did last time. We can let's do an anchor from IPO. It's high. So when it broke below over here, oh yeah, that's right. Yeah, some of I think Sunrun is a solar company too that shows up as semiconductor. So yeah, in this case, like when it when it had its momentum crossover after the retest of the AVUF from IPO back in 2021, it got up above the 382 and retested it before taking off. And that's a pretty good play. Like I would like to see it do that um before getting like too excited about it. So it's made a really strong move over the past few days. If it's going to get up into like 15 to 18, uh, you'll probably see it hit resistance here, come back to the 236. That would be a good, if it finds support at this level, I would like that. But yeah, it's aggressive to mess with it now, but run was as well. Let's see if this one has, it's not as much history here to do a seasonality chart. Enphase is one my solar guys were doing here, fixing mine the other day. And they said, you wouldn't have this issue if you had Enphase. So if you need a new system, get Enphase. And I was like, oh, tell me more. And they've got a new backup battery coming out, like their 10 kilowatt um the 10 kilowatt battery is coming out soon. And this is a name that has not taken off in the solar space. And they say that their equipment is the best, but yeah, I just don't know enough about it. So, but I just know this one has not moved with the rest of the solar space yet. And then I know Travis has talked about this in the Value Momentum group a bunch of times, and CSIQ is has also done really well. This is a stronger move, and this is Canadian solar. It's a strong move into the bull zone. The RSI has found support at its moving average and is moving higher. Your on balance volume is popping, and you could get, once we break above about 12, we've got a case for an inverted head and shoulders at the bottom of a downtrend, and then that probably takes us into this AV WAP from the prior high. So this could be an interesting one to keep on the radar for anybody who's playing with the solar names. I do have a position in this one. Um, I think I could do one more. I have energy for one more chart left in me. If you guys have another that you want to take a look at. Anybody still in? Anybody still messing with the fart coin? So this five wave up played out really well. We're probably going to see it come down to 107 and then likely 82 to 65 to 82 cents over the summertime. Should be interesting. Oh, you know what? Let's take a look at Bitcoin with the Gann chart. So we've got um, you know if we're working into this um, if this pizza day thing is gonna see a little pop come with it or anything, that probably points to this area right up here is what I'm looking at, is somewhere around like 109 to as high as like 116. But you know I'm less inclined to think that that kind of gets us to like a triple top territory too. So it'll be interesting to see if we see that this time of year. But from a seasonality standpoint, um, we know that um, Bitcoin's probably that Bitcoin's probably going to follow what equities do in these weaker months of the year. And I'm just going to get that box moved over. So around this time of the year, we start to see Bitcoin move into more like seasonal weakness. It doesn't look that way because it's so skewed by the early years, but in these last 4 years, it's really kind of followed the same cycle as equities have. Um, and that tells me that whatever we see happen, um, into a high this month is probably not to be trusted during June and July. And I'm going to look to retool, reallocate in August for the stronger seasonality in September through November. Yeah, I think that's. Oh, and let's just take one quick look at gold. So we know that this is a forecasted target up here. It's a 300% extension from the momentum crossover back in 2024. Um, this is a really steep parabolic move coming out of a base. And it's well exceeded a forecast that you would take from the base. In fact, like right around that forecast is where it consolidated a bit. So, on the one hand, this looks like it's cooked, right? Um, but on the other, and you can even make a case for it, like it's exceeded a forecasted range from its base, the bottom of its base in 2016. And so now, once you're above forecast and things, that's when, if it was an equity, it would be riskier, but it's behaving differently because of the way that central banks are allocating to it and things. So it's not just being used for speculation by us, but it's fallen below the AVWAP from the last test of its 34 period EMA band, and now that forces us to take a look at an older anchor point and see if any of these are now going to be more meaningful. And so it's coming back to test a low anchored to March of this year, and it failed to reclaim the one from all-time high, but it has come down to its 382, and that's normally where you would start to reaccumulate in a strong uptrend. Is a retest of 382 is where I would like to. What I don't like is that it's lost this on balance volume, and if we look at it in the past, when it's broken down and lost the on balance volume has fallen below its moving average and rolled over like that, that's brought us into like lengthy consolidation. So it's a lengthy like sideways, maybe not necessarily a deep drawdown, but things that move up in a parabolic motion generally don't correct sideways. They generally correct downward more steeply. So I'm more bearish on gold right now. Seasonally, I would normally be more interested in it this time of year as a safety play, but I think it's given how far it's run, I'm less inclined to reallocate here for our portfolio, and I'm going to take a wait and see approach. Maybe see if it comes back down and tests a prior base or prior breakout, but I expect that that we're less likely to retain this bull zone. You see that the RSI is like failing into moving averages that have crossed over as this on balance volume is declining. So this is kind of hands off for me for right now. Once we get some unfavorable macro news that sends everybody back into it, that would probably be like a opportunity to take more profit. So, but I think that's it for me for tonight. And If you guys have any questions, anything that comes up afterwards, please don't hesitate to reach out. I'm always taking a look at this stuff and appreciate all the ideas that you guys bring forward.
Thank you very much, Ben.
Thank you.
All right, thanks, guys. Have a great night.
You
You
too.
too.